In the ever-evolving landscape of cryptocurrency, understanding key market metrics is crucial for investors and enthusiasts alike. Among these metrics, Bitcoin dominance stands out as one of the most significant indicators. It represents the ratio of Bitcoin's market capitalization to the overall market capitalization of all cryptocurrencies. This metric offers a snapshot of Bitcoin's influence over the broader market, serving as a gauge of investor confidence in Bitcoin relative to other cryptocurrencies. In this script, we will delve into the current state of Bitcoin dominance, explore the factors influencing its trends, and make predictions about its future trajectory. By the end, you'll have a comprehensive understanding of why Bitcoin dominance matters and what it could mean for the future of the crypto market. Overview of Bitcoin dominance. What is Bitcoin dominance? Bitcoin dominance, often abbreviated as BTCD, is a metric that shows Bitcoin's share of the total cryptocurrency market capitalization. If Bitcoin's market cap is $1 trillion and the entire crypto market is worth $2 trillion, then Bitcoin dominance would be 50%. This metric is crucial because it reflects the relative strength of Bitcoin compared to other cryptocurrencies. Historically, Bitcoin has maintained a dominant position due to its first-mover advantage, strong brand recognition, and widespread adoption. However, this dominance fluctuates over time as new altcoins, or alternative cryptocurrencies, emerge and capture market share. Bitcoin dominance has seen significant fluctuations over the years. In the early days of cryptocurrency, Bitcoin's dominance was near absolute, often hovering around 90% or more. However, as the market matured and thousands of altcoins were introduced, Bitcoin's dominance began to decline. This decline was particularly noticeable during the bull markets of 2017 and 2021, when altcoins like Ethereum, Ripple, and others saw massive price increases and market cap growth. Despite these fluctuations, Bitcoin has consistently rebounded, reaffirming its position as the king of cryptocurrencies. Understanding these historical trends is essential for predicting future movements in Bitcoin dominance and their implications for the broader market. Analyzing the current Bitcoin dominance percentage. As of the latest data, Bitcoin dominance is hovering around 57%, a significant increase from its lows during the altcoin boom of 2021. This rise in dominance can be attributed to several factors, including the recent market corrections that have seen many altcoins lose significant value relative to Bitcoin. Investors often turn to Bitcoin as a safe haven during times of uncertainty, leading to an increase in its market share. Additionally, the growing interest in Bitcoin from institutional investors has bolstered its market cap, further increasing its dominance. The trend line analysis of Bitcoin dominance reveals a gradual upward movement over the past few months. This trend is consistent with historical patterns, where Bitcoin tends to regain dominance after periods of altcoin exuberance. By connecting key points from previous cycles, we can identify conservative and more aggressive trend lines. The conservative trend line connects the highs from 2021 with those from 2022, showing a steady upward movement. The more aggressive trend line, which connects the lows from 2021 with the recent highs, suggests that Bitcoin dominance could rise even further, potentially reaching 60% or more in the coming months. Factors influencing Bitcoin dominance. The impact of monetary policy on Bitcoin dominance. Monetary policy, particularly that of the United States Federal Reserve, plays a significant role in influencing Bitcoin dominance. When the Fed tightens monetary policy, such as by raising interest rates or tapering asset purchases, risk assets like stocks and cryptocurrencies tend to suffer. During these periods, Bitcoin, often viewed as a digital gold, tends to outperform other cryptocurrencies. This is because Bitcoin is perceived as a more stable and less speculative investment compared to altcoins, which are often seen as higher risk. Conversely, when the Fed loosens monetary policy, providing more liquidity to the market, altcoins tend to perform better as investors seek out higher returns, leading to a decline in Bitcoin dominance. Labor market indicators and their influence. Labor market data is another critical factor that indirectly affects Bitcoin dominance. Metrics such as the unemployment rate, job openings per unemployed worker, and labor force participation rate provide insights into the health of the economy. When these indicators show signs of weakening, it suggests that the economy may be heading towards a recession. In response, the Federal Reserve may decide to cut interest rates or implement other forms of monetary stimulus. Such actions typically lead to a surge in risk assets, including cryptocurrencies. However, during the initial stages of economic weakness, investors may flock to Bitcoin as a safer asset, thereby increasing its dominance. The role of social risk metrics. Social risk metrics, which gauge investor sentiment and risk appetite, also play a crucial role in determining Bitcoin dominance. These metrics track the level of social engagement, such as mentions on social media, search trends, and news coverage related to cryptocurrencies. During periods of heightened social risk, where investor sentiment is particularly bullish, altcoins tend to perform well, often at the expense of Bitcoin's dominance. Conversely, when social risk is low, indicating a more cautious or bearish market sentiment, Bitcoin tends to outperform as investors retreat to the relative safety of the largest and most established cryptocurrency. This inverse relationship between social risk and Bitcoin dominance is a key dynamic to monitor. Predictions for Bitcoin dominance. Short-term outlook for 2024. In the short term, Bitcoin dominance is likely to continue its upward trajectory, potentially reaching its peak in the second half of 2024. Several factors support this prediction. Firstly, the current macroeconomic environment, characterized by high interest rates and a slowing economy, favors Bitcoin over riskier altcoins. As investors become more risk-averse, they are likely to increase their allocations to Bitcoin, driving up its dominance. Additionally, the upcoming Bitcoin halving in 2024 is expected to generate increased interest in Bitcoin, further boosting its market share. Based on these factors, it is reasonable to expect Bitcoin dominance to reach or even exceed 60% by the end of the year. Long-term outlook for 2025 and beyond. Looking further ahead to 2025 and beyond, the outlook for Bitcoin dominance becomes more complex. Historically, Bitcoin dominance tends to peak shortly after a Bitcoin halving event and then decline as the market enters a new bull phase led by altcoins. This pattern was observed in 2017 and 2021, where Bitcoin dominance peaked in the year following the halving before altcoins took center stage. If this pattern holds, we could see Bitcoin dominance decline in 2025 as altcoins rally. However, the extent of this decline will depend on several factors, including the strength of the global economy, the pace of technological innovation in the crypto space, and the regulatory environment. While a decline in Bitcoin dominance is likely, it may not be as pronounced as in previous cycles, given Bitcoin's growing institutional adoption and its position as a digital store of value. Impact on altcoins. The struggle of altcoins in a high Bitcoin dominance environment. As Bitcoin dominance rises, altcoins typically struggle to maintain their market share. This is because investor capital flows into Bitcoin at the expense of smaller, more speculative assets. In a high Bitcoin dominance environment, many altcoins experience significant price declines as investors seek the relative safety and liquidity of Bitcoin. This trend is particularly evident during market corrections, where Bitcoin often outperforms and altcoins suffer more significant losses. For altcoin investors, this environment can be challenging, as even fundamentally strong projects may see their prices decline in the face of rising Bitcoin dominance. The potential for altcoin recovery. Despite the challenges posed by rising Bitcoin dominance, there is potential for an altcoin recovery in the future. Historically, altcoins have outperformed Bitcoin during the later stages of a bull market, when risk appetite is high and investors seek out higher returns. Additionally, as Bitcoin dominance peaks and begins to decline, altcoins often experience a resurgence, driven by new technological developments, increased adoption, and speculative interest. For example, the rise of decentralized finance, DeFi, and non-fungible tokens, NFTs, in 2020 and 2021 led to a significant increase in the market share of Ethereum and other altcoins. However, for this recovery to occur, the broader market conditions must be favorable, with a supportive macroeconomic environment and robust investor demand. Key indicators to watch. One of the key metrics to watch is Bitcoin dominance plus Ethereum, ETH dominance. Together, these two cryptocurrencies account for a significant portion of the total market capitalization. As of the latest data, this combined dominance is approaching 73%, a critical threshold that, if breached, could signal further gains for both Bitcoin and Ethereum at the expense of other altcoins. This metric is particularly important because Ethereum often serves as a bellwether for the broader altcoin market. If Ethereum's dominance increases, it suggests that investors are favoring larger, more established cryptocurrencies over smaller, riskier assets. Another important metric is Bitcoin dominance excluding stablecoins. Stablecoins such as USDT and USDC have grown significantly in market cap, skewing traditional dominance metrics. By excluding stablecoins, we get a clearer picture of Bitcoin's dominance relative to other cryptocurrencies. This metric has been on an upward trend, and if it continues, it could reach around 64.5% by September. This would represent a significant milestone, indicating strong investor confidence in Bitcoin relative to other non-stablecoin assets. Monitoring this metric will be crucial for understanding the market dynamics in the coming months. Lastly, labor market data, particularly the unemployment rate, is a critical indicator to watch. The unemployment rate serves as a lagging indicator of economic health, and when it begins to rise, it suggests that the economy is weakening. Historically, a rising unemployment rate has preceded monetary easing by the Federal Reserve, which in turn has significant implications for the cryptocurrency market. If the unemployment rate continues to increase, it could signal the onset of a recession, prompting the Fed to cut interest rates and implement other forms of stimulus. Such actions would likely lead to increased liquidity in the market, benefiting risk assets, including cryptocurrencies. However, in the short term, rising unemployment could also lead to increased investor caution, driving up Bitcoin dominance as investors seek the relative safety of the largest cryptocurrency. In conclusion, Bitcoin dominance is a critical metric that offers valuable insights into the state of the cryptocurrency market. Currently, Bitcoin dominance is on the rise, driven by a combination of macroeconomic factors, including tight monetary policy, weakening labor market data, and low social risk. These factors suggest that Bitcoin will continue to outperform altcoins in the near term, with dominance potentially reaching or exceeding 60% by the end of 2024. However, as monetary policy loosens and the economic environment stabilizes, we could see a shift in market dynamics, with altcoins regaining market share in 2025 and beyond. Investors should remain vigilant, monitoring key indicators such as Bitcoin dominance plus ETH dominance, Bitcoin dominance excluding stablecoins, and labor market data to stay ahead of market trends. If you found this analysis insightful, be sure to subscribe to our channel and give this video a thumbs up. Staying informed about market trends is crucial in the fast-paced world of cryptocurrency, and by subscribing, you'll receive regular updates on the latest developments. Additionally, if you're looking for more in-depth analysis and insights, consider checking out Into the Cryptoverse Premium. We're currently offering a sale, so now is the perfect time to join. Visit intothecryptoverse.com for more details. Thank you for watching, and we'll see you in the next video.